Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Hello and welcome to another College Investor Audio Show. Can cryptocurrency hedge against a stock market crash? That's the question we're answering today, or attempting to, on the College Investor Audio Show. Thanks so much for being here. So cryptocurrencies are meant to be an alternative to fiat currencies, like the US dollar, which are controlled by central banks. Cryptocurrencies are not controlled by any bank, government, entity, or individual. Those characteristics make them independent forms of currency, which appeal to many people who do not believe in the long-term viability of government-controlled fiat currencies. Cryptocurrencies can also be traded. Many of them are extremely liquid. This liquidity allows traders to easily move in and out of cryptocurrencies. However, with so many traders betting in different directions and moving in and out of cryptocurrencies every single second of the day, they remain very volatile. Volatility isn't necessarily a bad thing. Compared to the stock market, are cryptocurrencies really that volatile? If you think cryptocurrencies are volatile, look at what happened to the stock market in March. Despite the massive March drop, by August 2020, by the way, the stock market had already made a new high. That's textbook extreme volatility. To narrow down the vast choices of available cryptocurrencies, we're going to focus on Bitcoin. If you were in Bitcoin over the past few years, how would you have done compared to the stock market when it comes to volatility? Is Bitcoin any type of hedge against the stock market? Is Bitcoin a safe haven? All great questions, and today we partner with eToro and try to answer each of them. eToro is a great platform to get started investing in cryptocurrencies because they trade most of the major coins. But they also allow you to invest in stocks, ETFs, and more. This allows you to have your entire portfolio in one place. The coming crash. Here's the truth. There's always a crash on the horizon. Timing it is the very difficult part about crashes. With so much liquidity pumped into the market by the Fed since March, many people believe any dips in the market will be quickly bought up. The scenario makes a crash unlikely. But crashes are part of any market. Maybe the Fed is able to prop up the market, but if people lose confidence, there may not be anything the Fed can do to stop it. There are a number of issues that can lead to a stock market crash this year, 2020. They include lack of agreement on additional fiscal stimulus, presidential election, drawn-out election, jobs numbers turn down, earnings reports turn down, coronavirus leads to more shutdowns. So this list that is certainly not exhaustive by any means, but those are the major issues that can lead to a crash this year. What assets might prevail? If by a crash we mean the stock market, assets that might prevail are those that are uncorrelated with the stock market. These uncorrelated assets will go down less, not at all, or may even go up as the stock market goes down. Knowing which assets these may be before the crash requires lots of historical research to find those correlations. You'll also need to keep a finger on the macroeconomic pulse. The problem with correlations is that they often change. During a crash, most assets tend to correlate towards one, meaning all assets go down. It's as if there isn't a safe place to hide during a crash. You can, of course, always put your money in cash during a crash, but that requires being able to predict the future. Let's see how Bitcoin has done during previous stock market crashes. Cryptocurrency is a popular choice. Bitcoin's correlation with the S&P 500 and gold has been changing over time. It's gone from minus 15% to plus 30%. We show you a graph at thecollegeinvestor.com, and in it shows the correlation in August 2019 at 15%. SPY is the S&P 500 ETF. So you can pretty much see that Bitcoin's correlation to the S&P 500 and gold is always fluctuating. To get a better idea of how Bitcoin has performed in crashes, let's look at a few. From August 2018 to mid-December 2018, the S&P 500 dropped by 60%. During the same period, Bitcoin dropped by 7.5%. Certainly, being in Bitcoin during this period would have seen less account drawdown. But what about the 2020 crash? Bitcoin crashed along with the market but came out of it quicker than the S&P 500. It also surpassed its February high in July. To answer some of our earlier questions, sometimes Bitcoin is a hedge against the stock market. Because of its volatility and the fact that nothing backs it, Bitcoin is not a safe haven. However, the volatility in Bitcoin is amplified compared to the stock market. The crashes are bigger, but the sprints higher out of a crash are also bigger. And periodically, you don't experience as much of a crash as the stock market. Of course, the problem is that it's hard to know ahead of time what Bitcoin will do compared to the S&P 500. Here's how you can invest your assets in crypto easily in a platform like eToro. So if you're not sure how to get started in doing this, eToro.com is a popular, regulated cryptocurrency trading platform. There's a wide variety of cryptocurrencies to choose from. You can also go with a predefined portfolio of cryptocurrencies. You can even trade on iOS or Android mobile devices too. Now, once you are comfortable investing in cryptocurrencies on eToro, you might consider its advanced platform called eToro X. It provides more control over your currencies and access to more stable coins. That's all we have for today. I did kind of a short one, but we hope it was really helpful for you in trying to determine how to prepare for the upcoming crash. It's a-comin'. If you want to find out more about eToro, a complete review, and how to get signed up, you can see it at thecollegeinvestor.com. Thanks again for stopping by. We love talking to you, and we'll talk to you again very soon.